Assalamualaikum. Hi everyone. Today I'm going to discuss final exam question of December 2019. Question 2 that is on MFRS 15 revenue from contracts with customers. Okay, for this question I'm going to focus on part B. Okay, so let's read the question together. Yummy Berhad is a company supplying kitchen equipment. Okay, the company closes its account on 30th June every year. Okay, on 1st January 2019, Yummy Berhad sold and delivered equipment to a customer. Yummy Berhad also agreed to service the equipment for 1 year period from 1st January 2019 with no additional charge. Both parties agreed with the contract price of 300,000. The standalone selling price of the equipment was 250,000 and Yummy Berhad would normally expect to receive 60,000 in consideration for providing 1 year service of the equipment. Yummy Berhad issued an invoice amounting 300,000 to the customer on 3rd January 2019. The amount was still outstanding as at 30th June 2019. Okay, required. A. Explain the treatment of these transactions by Yummy Berhad for the year ended 30th June 2019 using 5 steps model in MFRS 15 revenue from contracts with customers. Okay, so for question A, okay, the marks allocated are 10. Okay, so how do we answer this question? Okay, so we need to apply the 5-step model. Okay, in MFRS 15. Right, so let's check out the answer for this question. Okay. Alright, so for the 5 steps model, okay, step 1, okay, we need to identify the contract with a customer. Alright, so as we all know, okay, from the situation given, okay, the contract was made by the seller Yummy Berhad, okay, and its customer, okay, on 1st January 2019, okay, to sell and deliver equipment to the customer and also to provide a service, okay, a service for the equipment for 1 year period. Okay, so you can write, okay, for the step 1, okay, on 1st January 2019, Yummy Berhad signed a contract with customer to sell a kitchen equipment as well as providing 1 year service of the equipment, right? So that is for step 1. Okay, for step 2, identify the performance obligation. Okay, so from the situation here, okay, we have to find the performance obligation by checking on the standalone prices given. Okay, so here we know that the standalone selling price is given for the equipment, okay, amounted to 250,000, and also for the service, for the 1 year service, right, amounted to 60,000. So there are two standalone prices given in this situation. So therefore, we can say that there are two performance obligations, okay, from the situation. Okay, Yummy Berhad has two performance obligations, which are first to deliver the kitchen equipment, and second to service the equipment for 1 year. Alright, so that is for step 2. And for step 3, we need to determine the transaction price. Okay, so from the information given, okay, we know that the contract price, okay, is 300,000. Okay, so that is the transaction price. Okay, so we can write the transaction price was 300,000. Okay, next, step 4, okay, we need to allocate the transaction price to the performance obligation. Alright, so for step 4, we have to allocate the transaction price amounted to 300,000 to each performance obligation, that is kitchen equipment, to deliver kitchen equipment and also to provide service to the equipment, right? So the transaction price has to be allocated to each performance obligation based on the standalone price. Okay, so here we have to find the standalone price for each performance obligation. Alright, for kitchen equipment, the standalone price is 250,000, and for the service, it's 60,000, yeah, per annum. Right, so the total standalone price is 310,000. Okay, now we need to allocate the transaction price 300,000 to each performance obligation. Okay, for the kitchen equipment, okay, we take the standalone price, okay, for kitchen equipment 250,000 divided by total standalone price times the transaction price. So we get this amount. Okay, this is the transaction price or revenue allocated to the kitchen equipment. Alright, for the service, okay, we take the standalone price for the service 60,000 divided by total standalone price times the transaction price 300,000. So we get this amount. Okay, so this is the transaction price or revenue allocated for the service. Okay, but you have to bear in mind that this revenue, okay, or transaction price allocated to the service is for the period of 1 year. Okay, so the last step is to recognize revenue when the entity satisfies its performance obligations. Okay, so how do we explain for step 5? Okay, so you can explain like this. Okay, Yami Berhad can recognize revenue from the sale of kitchen equipment at a point in time, that is on 1st January 2019, when the equipment was delivered to the customer. The obligation to supply the equipment was satisfied fully for the year ended 30th June 2019. Okay, so as we all know, the financial year of this company ends on 30th June. Okay, ended on 30th June 2019. So the obligation to supply the equipment has been satisfied during the year ended 30th June 2019. So the revenue of 241,935 ringgit point 48. Okay, 241,935 ringgit 0.48. Okay, in respect of the supply of equipment should be recognized. Okay, so the revenue that is recognized, okay, for the supply of equipment is based on this transaction price. Okay, this transaction price that is allocated to the kitchen equipment. Okay, so this is the amount of revenue that we can recognize from the sale of kitchen equipment on 1st January 2019, or during the year ended 30th June 2019. Okay, and then revenue from providing services is recognized over time. Okay, recognized over time when the services were provided. Okay, so as we know, the service for the equipment will be provided over 1 year period. Okay, so the revenue from the service, okay, has to be recognized over the period, yeah, when the service has been provided. Okay, so in this situation, only half of the obligation to provide the service is satisfied for the year ended 30th June 2019. Alright, because the contract begins on 1st January 2019, alright, and it should be ended on 31st December 2019. Okay, but the financial year of this company ends on 30th June 2019, right? So only half of the year the service has been provided. Okay, so the service has been provided only for 6 months. Okay, since the financial year ends, the financial year end of this company is on 30th June 2019. Okay, so we only have to take into account the service for only half, okay, of the 1 year period. So the revenue of 29,032 ringgit 0.26, okay, should be recognized. Okay, so we can only recognize half of the revenue that we calculated here. Okay, so the revenue or the transaction price for the service that we calculated just now, okay, we calculated in step 4, okay, is 58,064 ringgit and 52 cents. Okay, so this one is for 1 year period. The revenue is for 1 year period. Okay, so we only have to recognize half of this amount of revenue. Okay, so we just take this amount, okay, 58,064 ringgit and 52 cents, okay, times 6 over 12 months. Okay, so this is the amount of the revenue that should be recognized for the services provided. Okay, all right, so we are done already with question 1. Okay, now we go to question B. Okay, for the question B, we are required to prepare the journal entries to record the above contract for the year ended 30th June 2019. Okay, so we need to prepare journal entries. Okay, so let's check out the answer for this question. Okay, so for the journal entries, okay, we need to record on 1st January 2019, that is when the equipment has been delivered to the customer. Okay, so that is when the revenue from the sale of equipment can be recognized. Okay, so on 1st January 2019, we can recognize the revenue from the sale of equipment. So we have to credit revenue. Okay, the revenue from the sale of equipment amounted to this one. Okay, and then we have to debit contract assets. Okay, amounted to this one. Okay, so why do we need to debit contract asset? Because the payment has not yet been received by the seller. Okay, the seller has not yet received the payment on 1st January 2019. In fact, okay, it is mentioned in this question that the amount, okay, Yami Berhad issued an invoice amounting 300,000 to the customer on 3rd January 2019. Okay, and the amount was still outstanding, okay, at 30th June 2019. So that means at the year ended 30th June 2019, okay, the payment has not yet been received. Okay, the seller has not yet received any payment from the customer yet. Okay, for the year ended 30th June 2019, right? So that's why we have to debit contract asset. Okay, why do we need, why not, why do we need to debit contract asset instead of accounts receivable here? Okay, so we need to debit contract asset because the seller has not yet performed another obligation, that is to provide service to the equipment. Okay, so we have to debit contract asset because the seller has not yet performed another obligation, that is to provide service to the equipment, okay, on this particular date. Okay, so that's why we have to debit contract asset, because another obligation has not been performed. Right, and then on 30th June 2019, okay, this is at the end of financial year. Okay, this is the end of financial year, and as we all know, on 30th June 2019, the revenue from the service of equipment can be recognized, okay, for over the period of 6 months. Okay, so on 30th June 2019, we can recognize the revenue from the service equipment over the period of 6 months. Okay, so we have to credit the revenue from service equipment amounted to 29,032 ringgit and 26 cents. Okay, this is taken from here. Okay, 29,032 ringgit and 26 cents. Okay, and then we have to credit contract asset. Okay, this one is to offset the contract asset recorded on 1st January. Okay, we need to offset the contract asset by half. Okay, because on 30th June 2019, okay, half of the performance obligation has been satisfied. Okay, half of the performance obligation has been satisfied, so that's why we need to offset the contract asset by half. okay, or we have to offset by 6 over 12 months, 6 over 12 months, since only half of the performance obligation has been satisfied. Okay, so that's why we have to credit half of the contract asset here, okay, amounted to this one, right? And we have to debit account receivable 150,000, okay? So this is the total of these two. The total of these two, okay, we have to debit account receivable by 150,000. Why do we need to debit account receivable? Because on this date, okay, the seller has not yet received payment from the customer, okay, and the performance obligation has been partly satisfied, okay. So the performance obligation has been satisfied, okay, for half of the period, okay, for 6-month period. So that's why we need to debit account receivable amounted to 150,000. Okay, this is actually half of the contract price or transaction price. We know that the total transaction price is 300,000. Since only half of the performance obligations have been satisfied, so we need to uh, debit account receivable by 150,000 only. That is half of the transaction price. Okay, so that's all about this question. Thank you very much. Okay, Assalamualaikum.